We're almost halfway through the year for 2025, and today we're going to talk about the performance of international markets relative to the US. I'm going to give you the summary version. The international markets have done dramatically better than the United States. So more importantly, what we're going to talk about, we're going to dig into those numbers, and then we're going to look at history, because I've gotten the question that says, hey Kyle, I know in past videos you've been talking about international markets are cheap, US is expensive, you should consider these international markets. And now that that has happened in a pretty big way, did we miss our opportunity? Did we miss our chance to be looking more global than the US? So we're going to look and see, okay, what does history tell us when you see one country or one region of the world outperforming and thinking about your global portfolio? So let's get started here and look at this chart. So this chart is going to go back to 1991, and it's going to have a different color representing different regions of the world. So in blue, you've got the United States. In green, you've got the UK. In orangish yellow, you've got Europe. And in pinkish red, you've got Japan, and purple, you've got emerging markets. Okay, and so what you can see is these colors are all over the place, okay, because we're looking at over 30 years worth of data. But what happens if most people just start looking at the US, if you just look at the US, right, it spends some time towards the top, and then it floats towards the bottom around 2002 to 2012, and then through 2012 to 2024, it's been hanging out at the top, or in other words, it's been outperforming the rest of the world. Where are we year to date for 2025? The United States is down around 5, and again, this is through the end of April 2025, while countries or large regions like Europe are up 17%, and then the rest of the world's everything in between. So between the US and Europe, you've got a 20+ % difference in performance just midway through the year. And again, as I mentioned in the earlier in this video, that's led the question, did I miss it, right? Does it still make sense for me to reallocate or to allocate globally after it's already done so well? So let's look and see, how does performance work? Does it just go back and forth every year? And in reality, in the past, it has not gone just back and forth every year. It's been kind of streaky, if you will. And so if you look, and going back to this chart again, you've got your blue. The US has spent quite a bit of time at the top over the last 14 years or so, which is why I think it leaves a lot of investors scratching their heads seeing the US at the bottom, because candidly, over the last 10 years, this hasn't happened in a long time. But if you look at history and you go back far enough, this is just a normal part of the investment pattern. And so, okay, so did we miss it? How did the investments work as far as being streaky? Let's look at cumulative returns and see how this looks over time. This chart here is going to look from 1970, and the purple is when international is outperforming the US, and by how much and how long, and the gray is when the US is outperforming how much and for how long. And essentially this goes, this trades, and sometimes the US is doing better, sometimes international is doing better, but what you can see is these are long periods of outperformance. And so if you look at extreme time periods, right, if you go back into the mid-80s, international outperformed the US by 300%, and then you move over into the mid-90s, right, you've got US outperforming by 200%, and then you've got everything in between. And so what's the point here? The point here is that yes, international markets have beat the US markets midway through the year by quite a bit, but did you miss your opportunity? Well, given looking at these numbers and how streaky some of this outperformance can be and how long it can last, I don't think you've missed the opportunity. But more importantly, we can look at this and let this be a reminder that the US does not always win in global markets. Sometimes it's winning, sometimes it's losing, and those periods can last for a very long time. And so look at your portfolio and say, okay, whether or not we missed the first 6 months, am I as diversified as I need to be? Do I know the expected rate of return on my portfolio? And as I always say, know what you own and know why you own it. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.